The world is losing confidence in global sovereign debt issuers, particularly in developed economies. The world is losing confidence in global sovereign debt issuers, particularly in developed economies. These countries have surpassed all of their limits. The economic limit, which shows that more debt does not generate any type of growth, furthermore creates depression in productivity growth. The fiscal limit that shows that interest expense soars despite central bank easing and low interest rates, as well as the fact that higher taxes don't reduce debt. In fact, higher taxes are a tool to justify increasing debt, not to reduce it. And the inflationary limit, the limit that shows that the confidence in the currency is declining and the purchasing power of it is going down, therefore inflation remains persistent. Global money supply is soaring. Global money supply is not declining, and central banks are not hawkish in any shape or form. What this graph shows, courtesy of Bloomberg, is that global money supply is back to record levels seen prior in September 2024. It's going back, and it's going back fast, because China is massively increasing money supply, because governments are simply not reducing their imbalances, and global indebtedness continues to soar. Global money supply is soaring, and the impact is very evident. Lack of confidence in the solvency and the ability of sovereign debt to be a reserve asset is driving the increase in demand for gold of central banks. The Chinese central bank, the Oman central bank, the Turkish, Polish, so many central banks are increasing their demand for gold because the lack of confidence in sovereign debt as a reserve asset and the losses incurred in that sovereign debt in the past years are driving central banks and other investors to look for real alternatives that show resilience in the face of volatility. This shows the diminishing confidence in the solvency of developed economy issuers. Global demand for gold continues to soar. It's not just central banks, which are obviously a big driver and an important element to understand the lack of confidence in sovereign issuers and the evidence of monetary debasement. But it's also global investors. Global investors are increasing their holdings of gold, reducing their holdings of sovereign debt, as the lack of returns of that sovereign debt are added to the concerns about fiscal policy. Investors are looking for a real alternative to hedge their portfolios against monetary debasement and against the lack of returns of sovereign debt. The old 60-40 portfolio is gone. Long-term bond yields have soared despite declining inflation, despite very accommodative central banks, and despite all of the comments of governments regarding fiscal policy. If you look at the incredible increase in long-term bond yields of Japan, it shows that the MMT fallacy is even more evident today than ever. Despite a central bank that monetizes as much debt as possible, despite many of the internal players holding their debt, despite a government that continues to have high taxes and tries to disguise its imbalances through taxation. All of those elements have proven to be fake responses. And the reality is that 30-year yields have gone through the roof. But it's not just Japan. It's in Germany, it's in the US, it's in developed economies in general. All these elements show that there's a declining confidence in sovereign issuers because they have exceeded all three limits: economic, fiscal, and inflationary limit. A lot has been said about the US debt, but the reality shows that foreign holding of US debt has not declined. In fact, it has gone up, and quite substantially. Furthermore, what we have seen is a very significant change in who holds that debt. let's go into more detail. The Chinese central bank and China are not the highest holders of US debt. They're not even the highest foreign holders of US debt. The largest holder of US debt in international holders is Japan, followed by the United Kingdom, followed by China in a very distant third position. And it's important because it's not just not the largest holder, but not even the largest foreign holder. What is more important about this table is that it is showing that there is a significant change in the way in which foreign holders are looking at US debt. China, Brazil, Saudi Arabia, all these countries have been reducing their holdings of US debt quite significantly and increasing holdings of gold. While, and this is interesting, we have seen a massive surge in the holdings of US debt from Canada, France, the UK, Belgium, Ireland, Switzerland. So what is actually happening is that we're seeing a global reshaping of the holding of US debt. Some countries do not see sovereign debt as the reserve asset anymore, and they're trying to hold more gold, and others need more US dollars. The evidence of the fallacy of the Keynesian model is Japan. Japan, despite the fact that the Bank of Japan holds a massive amount of sovereign debt, and the reality that we see in this table, which shows that it's mostly domestic players that buy Japanese bonds, despite a very aggressive central bank and despite very high support from domestic players, Japanese debt is plummeting. Japanese long-term debt is plummeting, and the evidence of the failure of Keynesianism is absolutely clear. Because, number one, many of these countries are resorting to taxation to try to solve their imbalances, and they don't. High taxes are not a tool to reduce debt. High taxes are a tool to justify very high debt, and then the consequences are even worse. Governments need to start now reducing expenditure. Keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.